All right, gang. So look, like I was saying, it's always easy to find good ideas, but really, you're limited in what you can add to your portfolio and how often you can add it, right? So let's take a little break from these weekly editions for the stock of the week portfolio, right? And let's talk about what we've done up to now, because there is a method behind the madness, right? Now, remember what our core values are in our portfolio building, right? We're looking for stocks, one, that we can keep for a while. The reason being, if we can keep them for a year or more, our tax obligation, if we sell for a profit, is almost half, right? Short-term gain, capital gain versus a long-term capital gain, right? It's a big difference. The other thing is a dividend, right? We want that bad boy working for us, regardless of whether the price goes sideways. Maybe you hit a market event like the COVID, things like that. You never know what's going to happen next, right? It's buying itself cheaper with the dividends. You don't have the cash to put in the portfolio to buy lower. Guess what? It does it for you, right? Through the dividends. And a great thing also too, we looked at another strategy, right? Sometimes you see something that's hot, you want to strike, you want to get in and out. We've done that too. We see a sector that's going to get hot in the coming months, right? Maybe you sacrifice one of your standards of like a dividend stock, but you're going to get the price acceleration and you're going to be in a hot sector. We utilize that and we kind of combined it all together, right? So let's kind of pop on over, and what we'll do is we'll use the YouTube listing, because I'll show you guys here. If you're watching this on the Investing Lab, the videos can kind of get kind of scattered and stuff, right, guys? With all the posts and stuff, because a lot of you post some great articles and stuff, and conversations start. So if you're really focusing on any of it, right, the stock of the week or the crypto show, the weekly crypto show, hop on over to the YouTube and subscribe to that. Because that way you'll never miss a show. So when we pop on over to our YouTube, it's really growing here, right? We're getting a lot of videos in here. We're getting a lot of content and stuff. It's a lot of fun. If you look at it, we have playlists. The playlist will sort everything out for you. One playlist is the stock of the week. One playlist is the daily updates. And then another playlist, our third playlist, of course, is our crypto show. So easy to find, easy to reference, easy to follow, right? But the big conversation, the fun conversation, is on the Investing Lab. So definitely it's worth it to have both, I think. But anyway, so we pop on over here and let's look at our stock of the week. So we'll sort them. Let's sort them by oldest to newest. Okay. So we pop on back, right? We go way back to Suncor. Suncor actually, yeah, Suncor was our first one. So let's take a look at Suncor. Suncor, we released on April, January, February, March 23rd. It was trading at about $20. We know that stock right now is trading. Let's go take a look. What's that trading at today? Now, Suncor is one, right? You can see it's trading at $23 right now. So you're up about $2 on the shares. And you know what's the great thing about this, guys? We've talked about it before, right? Where sorry, I'm uploading the market update and the same time I'm recording this. So trying to multitask, right? 3-day weekend coming up. Let's get the work out of the way. Anyways, as Suncor, you're up a couple bucks. Now this one, we know, if we take a look at it, we know it's got good ratios and stuff, but we bought this for another reason. One, it's got the dividend, right? Almost 3% yield. That's real nice, right? And so since you bought it, if you bought it when we talked about it, like we did, you've already got a dividend. Isn't that great? Yeah, you're getting paid to own a stock. Nothing better than that. But we like this because one, it fits that model, right? For something to work for us. This one's giving us price acceleration and dividend purchasing, which is great, but it's also in a hot sector that's probably going to get hotter, and in one of the most heavily discussed topic, and you saw it in Bitcoin last week, sustainability. This one's focusing on green energy. So we like that play. We'll stick with Suncor. We're still uploading there. And then we rolled into something just boring. And we made jokes about this before, right? Cracker Barrel. Let's see where Cracker Barrel is. Now, on my notes, Cracker Barrel was the week right before Suncor, and it was about 170. This one's probably down a little bit. Cracker Barrel. Why do we buy this? Well, we're buying this one for the stability, right? You can see we're down maybe about $10 on the original purchase, but this one, again, 2.52% dividend. But this one's a reopening play, right? We wanted to get something on the board retail without getting into anything that's very volatile and stuff. We wanted something nice and stable. And you can see that chart, right? Let's go with a 1-year chart here. Let's pop a 1-year chart here. See how nice and stable that is. That was your COVID and stuff there. You know what I mean? So we like Cracker Barrel, but we wanted something that would be retail with brand recognition. And so we added the Cracker Barrel to our portfolios. Let's pop on over and see the next one. Apple. What's everybody been talking about, including us, the last few weeks? The market's moving up, but Apple is not participating. But let me show you the power of Apple. We released Apple on 3/9 the week before Cracker Barrel. And here's the great thing about Apple. It's done absolutely nothing, right? Everybody says, oh, sell your Apple. Kathy Wood, right? She hates Apple. But she's dying in Tesla boots right now. Look at that. We're up. When we released this, it was about $120. It's now almost $7 higher. You've gotten a dividend, right? And you also own one of the most profitable companies in the world. That's putting your money to work, guys. When you look at a stock, right, and day in and day out, everybody on CNBC is telling you what's wrong with Apple. But you look at your Apple and you're up $7 a share. You also got a dividend and you're not worried about a damn thing. Guess what? You're laughing at those people on CNBC. Here's another energy play, right? And this one, we love this one. This was our first stock of the week, Energy Transfer. We love this stock, and people actually were DMing us that we were crazy to pick this. When we picked this on the 2nd of March, it was trading at $8. Let's pop on over to ET. Let's see ET. This one is the trifecta of them all. Why? Well, look, we've got nice price acceleration. That's about 20% higher than when we first started getting this. We also got a nice little dividend, and we've gotten paid that dividend already. So this one's giving you everything you want. And it's in what should be going forward, especially with the launch of Memorial Day weekend and the reopening, energy, right? Probably will be one of the hottest sectors. Probably the only thing they'll be talking about more than this then energy is inflation. Then we went with a love stock, right? We did this at the end of May. At the end of March, right? We did Match.com at 135. Here's another one. This one, right? Match. Let's see. When we bought this, it was 135, and it's up about $10 right now. And now this one doesn't have a dividend, but why did we buy it? Well, we felt like it was down. Remember when we bought it at about 135. We felt like it was down, and it was down for the wrong reasons, right? Everybody's saying, well, with the reopening, people are going to get away from finding love online. Well, obviously that hasn't happened, and we knew it wouldn't happen, right? People will start enjoying the convenience of technology, and guess what happens? Sorry here, guys. Excuse me. And people start enjoying the convenience of technology, and guess what happens, guys? They start making it a part of their life, and that's what happened with Match. So we'll stick with that one. Let's pop on over. That was another good one, right? Win was another reopening one, right? We released that April 6th, 133. Let's go check where that's at. Now, Win was a little bit different. We just wanted to catch some of that Vegas love, right? 133. We just wanted to catch some of that Vegas love, right? And so we bought it at about 133. It's pretty much flat since then, right? And it doesn't have a dividend, but we're going to sit on that because we know summer Summer travel, people are driving, people are flying, people are gambling, right? The NBA playoffs just started. Baseball's getting into full swing. And football is right there around the corner at preseason is what? The end of August. So we bought a little position in Wynn because we love the hotels and stuff. And we think that with the Macau operations and stuff, it'll get a double dip there. And we'll sit on this for a while. The only thing we don't like about this one is we're not getting the dividend. But we're looking for price acceleration. Now, here's a real winner. When we released this, we got a little bit of flack back on the DMs, right? With you guys are you're gun advocates and stuff. We are huge Second Amendment people, okay? Don't kid yourself, all right? And we're not even going to participate in that discussion. But we told you guys, right? What was hot? Ammo. They can't produce enough of it to meet the demands, right? And the demands now, hunting is bigger again and stuff, right? People are getting out. They can go to the gun range, whatever, and they're ammo, right? So we released that on the 14th of April, and it was at $32. Let's pop on over and see where that one is. I think you'll be pleasantly surprised if you bought it. Right? Boom. So we're up about $6, $7 on the shares, and this thing's breaking out. This is another one we bought. We bought with a different focus, right? We'd love to keep this for a year before we cash it out. But if we get a double or something, we'll absolutely take our money. Nobody ever lost money taking a profit. But we want to get some more of that ammo love until they resolve this labor crisis and where they just can't get enough people in the production plants to create enough ammo to meet the demands of the gun owners. Guess what? This thing's going to keep moving up. And so we'll keep it for a while. Let's move on to the next one. Right? And there's the one, Playboy. We did this with a blush on our face, right, guys and girls? Playboy. Let's go see that. Now, Playboy released on 4/21. And why did we do that? If you guys are following along, you remember it was the NFT craze, right? And we were looking for something that would really pick up on the NFT craze. So we released Playboy, and it was $37 a share, and we had bought some at that $37. Let's go see what happened, because if you bought this, you really were happy, and so were we. Remember, guys, we buy everything that we mentioned. So if you made money on it, we made money on it too. We're all happy. But anyways, if you look at this bad boy, let's take a three-month chart. We bought this one on 4/21, right? So we bought this one right about here, remember? Right about 4/21, right there. So maybe about $42, right? That thing ran up to $60. You could have cashed it out at easy 50%, right? Pushing at 60, 70%. It's kind of settled down since then. We took some profits on it. We always tell you to take some profits on it. And we mentioned it when we started buying this stock, that we're playing it for momentum, for price acceleration. So we kept a few shares, but we also took some profit at that huge gain. You guys should too. Learn to take a profit. ECL, right? Boring, right? But we wanted to get some of that restaurant love in there, right? With the reopening, we already had the Win. If you look back, we had the Cracker Barrel, we had the Win, but we wanted to get something that was a little bit more in the functions of restaurants. So we went with Ecolab. Every restaurant on the planet uses Ecolab products. They use their machines, their products, all this stuff, their service and stuff. So we released Ecolab on 4/27 at $220. Let's go see what it is. Ecolab. And you can see it's down a little bit, but this one, we've already got a dividend, right? We got a dividend, and we're also, as restaurants start reopening, the products will get more demand. And so it's a positioning, right? We positioned it. We'll take the dividend for now. We're happy with at least the price stability, and then we'll let this thing roll, right? So that was another good one. Now, the last three picks here, guys, that we're going to get into. This is where a couple weeks ago, remember guys, we wanted to get some crypto exposure. We wanted to bring an opportunity to our viewers where they didn't have to open up a wallet, didn't have to get on a crypto exchange, but they could get some crypto love into their portfolios. Most people that want to do that, guys, are adverse. They're risk adverse to the volatility of the price swings of crypto. So they don't want that. They don't want that. And so we found a way, right? How do you do that? Well, why buy the asset when you can buy the people trading the asset, right? Which is what you do with an exchange, right? And so first one we went with the big one, right? Right out of the gate, Coinbase. Now Coinbase is huge and it's an amazing exchange, right? You watch videos and you get free coin and stuff like that. And we were a little bit early on coin. We released that on 5/5, and guess what? We released it when it was about $280. Let's see where it is now. But let me finish this thought with you. We're down about what, 20, 30 bucks, 30, 40 bucks, but looks like it's found a bottom. It had a fantastic earnings report, guys. So this one will add a little bit. We're here and there. Now we've only got maybe 25, 30 shares of coin, but we're buying it like a share here, 3 shares there, a share there. We make a little money on an options play like we did on the Ford. Maybe we go in and buy another share of Coinbase, average down. So right now we're averaged at about 250. So we're just off the mark, but we started this trade at 280 and that'll be the level. Now, not everybody can buy a $300 stock, which is what it was when we released it, right? It was at $280, but they want some of that thesis that we use with this, right? Why buy the coin and the price action when you can buy the traders and there's commissions, right? Which is what you do when you buy the exchange. So with that, we followed up with Voyager. Voyager, right? Very progressive, very young, very now orientated exchange, right? On the app, it's great, it's fast, it's easy. It uses Plaid, right? Plaid is a great bridge that all these companies are using now, built on blockchain and stuff like that. Why not? So we added that, and it was another opportunity at a cheaper price for some of our viewers to get into that exchange action. Maybe they didn't want to, or they couldn't afford to get into that Coinbase. So we released that on 5/11, and when we released it, it was at $19. Let's go see what it's at right now. VYGVF. VYGVF. Voyager, yay, Voyager ditto. So you can see we're up about $1, but this play is just getting started, guys, right? Look, if you started buying when we released it, let's get a 1 month chart in here since we bought this recently. You can see the price action. You've had a couple opportunities, and if you're a chartist like we are, you know this is a great chart. You got 1 bottom, 2 bottom, 3 bottoms, and a bounce. Triple bottom, right? So you're buying at the right time. Of course, we released this right here at about 19. Right now we're trading at about 20. But look at the effectiveness of your triple bottom, guys. 1 bottom, 2 bottoms, 3 bottoms, and now it's up $3 from where that bottom was. That's a great opportunity to enter a stock. And so now we wanted one more facet of crypto exposure in our portfolio, right? Without putting the coin in the portfolio. So what did we go with? We went with a miner. Now, what was the first thing that happened after this, right? Elon Musk came out and he started all this yabbering about Tesla's not going to accept Bitcoin anymore because we're killing the planet and stuff like that. Like his cobalt mining doesn't kill the planet, but nobody talks about that, right? And the humanity atrocities that go with that cobalt mining. Nobody wants to talk about that. But goddamn that Bitcoin, man, it's killing the planet. Sounds like he was buying more. Anyways, so we got into the miners, but guess what? We got into this DigiHost, and it's been beautiful. And also, too, DigiHost is focused on sustainable energy to fuel their miners, right? So let's go take a look at that one. We released that one at, I think it was $22. Let's see. HSS, HF. I got a lot of tickers to remember, kids. $2.20 when we released this about a week ago. Right. And you can see it's been kind of fluctuating and stuff. Got caught up in that crypto mania, right, of last week and stuff. But look at that bounce it's making right now. So that was your buying opportunity. But you can see DigiHost Technology, formerly Hash Change, Canada-based company, focused on mining, cryptocurrencies, blah, blah, blah. But their focus, a lot of their focus, if you look at their news reports, CNBC is always a terrible place for news reports, unless it's GameStop or something that Jim Cramer's talking about. Probably we should use finance.yahoo going forward, but that's neither here nor there. But one of the big things these guys are working towards is getting their miners on sustainable energy. So it fits into everything too, right? So, and that's a nice cheap stock under $5, man. You can get that thing for $2 right now. And that's one that will hold for a while, right? We know the crypto world's going through some energy. So I just want to close with this, guys. If you look at this, you see how we found things that we thought would be hot in the near future, right? Energy, right? Reopenings, right? We went with some energy stocks, Suncor and ET. We made sure those also fit into the popular opinion, right? The mainstream opinion, sustainable energy, right? And for another opening, we went with Cracker Barrel, right? A lot of people are going with all these other ones, Amazon, Netflix, all this stuff, blah, blah, blah. We went with something a little boring, but we felt like it has brand recognition. It has restaurants all over, right? Multiple locations. It's a well-managed company, and we'll just ride this for a while with the reopening. Same thing with Match.com. Match.com is in that reopening play. We felt like we were given an opportunity at a cheaper price on that stock, and it played out true, right? Everybody was saying, well, sell your Match because nobody's going to be on Match.com once we reopen. It's like, dude, most of those people, after they've spent a year behind a keyboard, don't know how to talk to a girl anyways. So they need Match.com. And it played true, right? And we took Wynn too. We took Wynn instead of MGM because we like Wynn. We like Wynn hotels better. And there's another lesson too, guys. Buy what you know. There's nothing wrong with that. You know what I mean? You can't know everything, we try to tell people we know everything, but you can't know everything. But it's always good when you stick with what you know. We got into that gun, the labor shortage, right? We're taking advantage of what? The labor shortage. And it was in ammunition. We know ammunition, especially when you're going into the warmer months and stuff, the hunting really becomes big. People are able to go down to the target ranges and stuff like that. And there just wasn't enough people to fund fuel the factories. And guess what? We're winning real big on that one. Playboy, you go on Instagram, you go on YouTube, you go on Facebook, you go on anything, especially Instagram, right, guys? Nothing gets likes like girls, right? Girls in bikinis, girls with big booties and all that stuff. Somebody will post the same one picture and it'll get 10,000 likes. You'll post something revolutionary and it'll get 3 likes. So we went with Playboy, right, on the NFT craze. We got a quick 50-60% out of this one. And then we kept a few shares for the long term. ECL, we want a little bit of that reopening love too. So we went with restaurants rather than buying another restaurant. What do? We went with the supplier, right? The chemical supplier. And then we got into some crypto. You see how we diversified, yet we got at times, right? We would get away from, at times we kind of get away from our base philosophy of great stocks we can keep for over a year or so, and we get those dividend payments so that we can weather any storms and stuff. But anytime we did, we had a thesis and we followed that thesis, right? So that's kind of there you go. There's your update on the stocks of the week, guys. I hope you enjoyed this. We'll look maybe to get another stock of the week going next week. But like I said, there comes times like right now where you want to do exactly what I'm doing. I'm in the Starship. I put my arm up. You sit back, relax, and let your portfolio do the work for you. All right, guys. But it won't work for you if you send a lame duck to work, he doesn't come home with a paycheck, right? He comes home with a pink slip. So don't do that with your stocks. All right, guys. All right. You guys have a great day.